The Modi government is looking back at 9 years of being in power. One of the world's leading multinational investment banks, financial services company, Morgan Stanley, has come out with a report which looks at India's economic performance over the past decades and looks out into the future about where India could possibly get over the next 10 years. So we thought this is a good opportunity to invite Ridham Desai. He's the managing director of Morgan Stanley in India. To talk about the report that they've just put out. It's generating headlines because the report is titled How India Has Transformed in Less Than a Decade. This India is different from what it was in 2013. In a short span of 10 years, India has gained positions in the world order with significant positive consequences for the macro and market outlook. That's the broad thrust of the report. And I want to take our viewers through some of what Morgan Stanley estimates and Morgan Stanley Research is saying will happen in India over the next 10 years to give you a sense of why global economy trackers are so excited about the India story at this moment. So Ridham and his team at Morgan Stanley estimate that India's GDP in dollar billions will, from financial year 22, where it stands at $3.1 trillion, in financial year 2032, so in about 10 years from now, go up to $7.9 trillion. The GDP per capita, that is currently at $2,278, in the next 10 decades, Morgan Stanley estimates could go up to $5,242. India's share of world exports as a percentage, which in December 2021 stood at 2.2, estimated to go up by 2031 to 4.5% of global exports. The size of India's retail market, which is very important for the way global companies look at the India story, estimated to go up from $781 billion in 2021 to $1,834 billion by December 2031. The size of India's equity markets, which currently stands at $3,500 billion, estimated to go up to $10,000 billion by the end of the decade. Similarly, India's IT services being exported, which currently stands at $178 billion, estimated to go up to $527 billion. Ridham, my first question, looking at the estimates that you've put out, now those in opposition or those who are skeptical about the India story would say, so what? Growth is a constant part of the story of a developing country like India, and India would continue to grow. What is it that you're picking up about where India is, where India has come over the past decade, and looking out into the future, which makes you think that the next 10 years could indeed be India's years? Ridham.
Hey, thanks, Rahul. So I think a lot has changed in the last 10 years. If you go back to 2013, the then Fed Reserve Chairman just uttered the word taper, and the Indian currency was down 20%. India is no longer as vulnerable on macro as it used to be. So we have achieved great amount of stability. This is not something that common people on the street will automatically realize. But the rupee actually, even though on a headline basis seems to be depreciating, has actually been amongst the better performing currencies in the world. What it has done essentially is it has fallen less than what other currencies have done against the dollar. So bulk of this is because the dollar is rising. So that's one part of the story, which is that we've had macro stability. How the common man on the street feels is inflation. I mean, look at what's happened in the last 2 years for the world at large. We've had inflation levels which we have not seen before. India went through a modest inflation cycle, but that was about it. And the prime reason for this is that this current administration led by the Prime Minister, and I would characterize the Prime Minister as an inflation hawk. I think when he came into office in 2014, one of the top agendas that he took was let's fix inflation. And he did a series of things to protect the country from inflation. And for a poor country, especially, even for large countries, inflation is the worst news that you can get. It actually just it extracts your ability to live in a decent way. So we have changed that. I think we've put a lot of infrastructure on the ground in most sectors. Between 2014 and today, we've added more infrastructure than we did in the previous 6 decades. So whether it's road, railways, airports, there's been enormous amount of investments that has been made. And then we've made some seminal changes to laws. I'll highlight three of them. For example, GST. Now, in the beginning, it seemed all very messy, but as things have settled down and 5 years have passed, GST is proving to be a big boost to the economy. We changed the Real Estate Regulation Act. This means that the way consumers interact with builders has changed, and you can see that in property demand. We changed the bankruptcy code. In the past, in this country, you could go bankrupt and just walk away. Now you can't. And so, there have been all these changes which make us fairly optimistic about how India stands going into the next 10 years.
Okay, what I'll do right now, Ridham, for our viewers is take everyone through the kind of progress we've made in the last 10 years and compare that with the progress in the previous 10. So you get a sense of what has happened in India across various parameters in the past decade. So we'll start with national highways measured in 1,000 kilometers. Between 2006 and 2014, and all of this is for the fiscal year, we had 25.7 thousand kilometers. That from 2015 to 2023 went up to 53.7 thousand kilometers. Let's now look at broadband subscriber base, which between 2006 to 2014 stood at 58.9 million subscribers. From 2015 to 2023 went up to a whopping 771.3 million subscribers. Let's now look at renewable energy. This in gigawatts. From 2006 to 2014 stood at 25.7. In the past decade, 95.7 gigawatts of renewable electricity. Let's look at railway routes which have been electrified, again expressed as 1,000 kilometers. Earlier it was 4.1 thousand kilometers, which was 6.3% of the total railway routes were electrified. Now 42.3% of the total railway routes are electrified, which is 28.8 thousand kilometers. So if I were to look at this data, Ridham, and I wanted to look at digital transactions as well, in FY 2017, digital transactions as a percentage of GDP stood at 8. Next year it went up to 12, then 21, 29, 40, 58, now 76%. As a percentage of GDP, 76% of transactions are digital. Now this, Ridham, is quite phenomenal, and you at Morgan Stanley would be able to compare how India is progressing on these parameters with the kind of progress that's been achieved in other countries of the globe. And when you do that, of course India is growing, but how is India growing in your view across these parameters in comparison to the rest of the world, especially those countries that are in India's peer set?
So Rahul, I think in terms of, say, digital economy, I think we've made far more progress than the rest of the world. So let me just give you one example. India is less than 4% of world GDP, but accounts for around 40% of all digital transactions. So the irony here is that if you look at modern things, India is actually progressing much faster. Some of the more painful things to fix are in the infrastructure space. So that's where we lag behind considerably since independence. And there's a fair bit of catch up to do. And there's still more catch up to do over the next 10 years. We still need to add a lot more to our infrastructure. So I think when you look at India, I think in soft metrics like digital, like say services exports, we're doing very well. In hard stuff like physical infrastructure, we've lagged behind. Now there has been some catch up in the last 10 years, but we have some more miles to travel before we can say that we are at developed nation status. It may take more than a decade to get there.
One of the things that concern me as I look at the percentage of GDP which is being invested in, we go back to 2001 where it stood at 26%, going up to 35% in 2005. In 2017, for example, it's at 32%. In 2021 at 27%. Now, what you're seeing on that graph are the estimates for the future, where in 2025, you're anticipating that investment as a percentage of GDP will stand at 35, 2029 at 34, 2033 at 33. So you're not really seeing investment as a percentage of GDP go up very dramatically. Is that something that concerns you? Because from what I understand, at a time when countries like Japan, South Korea and China were really at the fastest pace of their growth trajectory, investments as a percentage of GDP constantly seem to be going up.
Yeah, so that has been a problem, and I think two big changes have happened in the last 5-7 years, which make me quite optimistic about the investment share of GDP. So the first is that we have managed to reduce subsidy burden, and the reason why we've been able to do that is because of direct benefits transfer. So again, this is down to technology, and it's down to India Stack. The government is able to identify intended beneficiaries and is able to transfer cash or kind to those people without any leakages. So, if you take out the COVID period, because during COVID, these expenditures did have to go up, but if you X out the COVID period, we have managed to actually shave a considerable amount of subsidy expenditure, which was largely leakage in the system. That money has now been put into infrastructure. So it has released capital for the government to build more infrastructure. The other thing that has happened is that there is a much better environment for investments in the corporate sector, private corporate sector. So the private corporate sector enjoys lower taxation, enjoys production-linked incentives. For the first time in the history of this country, the government is taking tax dollars and giving it to companies and telling them, go and invest. And I think you will see an upside surprise on the investment cycle. Now, this works very well for the country, as you very rightly point out, because when companies invest, they create jobs. When they create jobs, they create wages, and you get a virtuous cycle of prosperity until, of course, the investment ratio goes through the roof and then, things start getting messy. But at the starting point of where we are in terms of, say, balance sheets, in terms of the investment ratio, I think these numbers are only going to go up in the next 5 years. The other thing which I'll highlight here is that the forces around the world are aligning in India's favor. So there is a China plus one happening. So a lot of companies are looking to diversify away from China, and India is a natural place to go to. Why? One is, of course, as I pointed out, there are government incentives and there's a better environment to do business. But two, most significantly, India is one of the best places in terms of markets. I think you spoke about that earlier. It is a place where I think a lot of companies are going to try and build their markets and try to grow their revenues. So companies will find it very attractive to be in India over the next 10 years, which is why I think this investment ratio is going up, and that's good for the economy.
I want to spend a moment comparing India with China. And the interesting thing here is that in the research that you've put out, you're comparing India's growth estimates with that of China. I just want to explain to our viewers what they're going to see on their screen. What you're seeing essentially is where you see negative, where it's below the zero, is where China was growing faster than India, and when we're more than zero is when India is growing faster than China. So from 2024, where Morgan Stanley is estimating that India will grow at 2.8% faster than China, by 2031 India could be growing at 3% more than China. This is a comparison of the real GDP growth rates in the two countries, whereas in 2008, for example, India was growing at 5.6% less than China. Now, is this something to be happy about and excited about? Because the converse to this is that China has already grown fast, phenomenally. So even if now India is growing faster than China, it's nothing really to be very jubilant about, because they've already reached a scale where they're 5 times the size of our economy.
So Rahul, see, I think when you make this India-China comparison, you need to bear in mind that China has had 30 years of stupendous growth, and it is kind of over now. So growth in China is decelerating very quickly. In fact, this year, China's population will decline, and this is a major drag on their growth rates. On the other hand, India is not going to have a 30-year sweet period. India's sweet period actually lasts a lot longer, because we have much better demographic conditions than China has. So I dare say, and obviously we're not making that forecast because it's so far into the future, but India may still be growing faster than China when you go at the turn of this century, which means that there is a long way ahead for India to catch up with China, and India will eventually catch up with China. The gap will close down quite a lot by the end of this decade, as we have written in our report, and will continue to close.
Do you have a timeline for when you think India could catch up with China by, or is that too difficult to estimate at this moment?
Well, it's a little too far out in the future, so it may not matter to people. A couple of generations may pass, but I don't think it will be, it won't be impossible to think that this happens by say 2050 or before that. It depends on, of course, also on what happens in China. But China's population decline is very difficult to reverse,
But it also
and we know
depends
that.
to some extent, and I want to understand from your perspective to what extent, on the macroeconomic political stability in India. For example, oftentimes in the past it's been said globally that this is India's moment, and for some reason or the other, India as a country collectively ended up botching up that moment and never turned out to be India's moment. It became South Korea's moment at one time, China's moment at the other, then possibly Vietnam's moment. So all of this, what are the conditions that you're basing your assumptions on?
Yeah, so Rahul, there are plenty risk factors out there. Yeah, you very rightly point out India is a democratic place. It has to appoint a government, elect a government every 5 years. There's no guarantee that a majority economic focused government comes into power. We've had fragmented government, coalition governments with other priorities in the past, during which periods the economy doesn't do well. We also have a difficult global outlook. Remember, when China was growing as fast as it was, global growth was in very good condition. The world is not a very pretty place now. It's got a very high level of debt and it's aging, which means that it's going to slow down. At a time when India is trying to export more, both services and goods, it is faced with a slowing world. So it's not going to be a straight line. It will be challenging. There will be these challenges along the way. India's domestic economy, I think, will do okay, but the external environment will remain tough. And along the way, there will be political volatility as well. So, yeah, all these forecasts have to be put into context. They do not necessarily pan out the way I'm thinking right now, because I really don't know which risks come when.
No, sure. And that, as we've seen with the pandemic, as we've seen with the Russia-Ukraine war, there can be factors that emerge on the immediate horizon which haven't been anticipated, in black swan events which are impossible to be able to guess. Now, I want to look at the big numbers, because you're estimating that by the end of the next decade, India's GDP will stand at $7.9 trillion in comparison to $3.1 trillion at this moment. How does this compare, Ridham, relative to the claims the government's been making? Because they've been promising a $5 trillion economy for a very long time, and then of course the pandemic upended those estimates. $7.9 trillion by FY32 and a per capita GDP of $5,242 relative to, in comparison with $2,278 at this moment. Where would that place India in the hierarchy of global wealth?
So see, in terms of absolute GDP, India will be in the top three. India will be in the top three by 2027. So it doesn't have to wait all the way till 2031. So we're getting there very quickly. In terms of per capita income, it will take a lot longer. So at $5,200, we'll be like a mid-income economy. We'll not be as poor as we are today. Right now, we're a poor country. At $2,200 or $2,300, remember, there are, a very large portion of our population earns subsistence income and is struggling to, to get roti kapda makan. We'll move out of that period in 10 years. I don't think we'll have too many people in that bracket, and a lot of people will be middle income. So that's, I think, very good news.
No, but these are averages, and averages are deceiving, because Mukesh Ambani's income and the poorest person's income then gets averaged out. So is that something that concerns you, growing inequality, the rich getting richer and the poor getting poorer? Is that something that you factor at all in your research?
So Rahul, actually inequality in India will decline as we get more prosperous. Inequality rises when we are not able to grow GDP. This is the irony, and this is what people need to understand, especially policymakers. The emphasis should be to get the economy to grow faster. It's when the tide lifts, all the boats rise, the smallest boats rise the most. It's not the large boats that benefit the most. So it's important to grow the economy faster to come out of poverty. And at $5,200, we'll have lower, lower differentials amongst the rich and the poor than we have today. There'll be a lot more people who will walk out of poverty. The middle layer of the income pyramid, as we call it, the income pyramid is how we stack up the income. It will actually swell. and there will be a lot more middle class people in this country. And if I can share the numbers, today we have 60 million people who are classified as middle class households, not people, households. That number will go to 160 million by the end of the decade. So it's good news actually.
Okay, interesting, because clearly India has some very strong tailwinds that are propelling the India story at this moment, becoming the third largest economy by 2027, and also raising our GDP and contributing to 1/5 of global growth. Those are interesting developments about the transformation that the India story has made in the last 9 years. Morgan Stanley's Managing Director Ridham Desai for joining me on the news track. Thank you very much. Aapke muh mein ghee shakkar. I hope all of what you're saying, just from the perspective of an Indian and being a part of the India story, does indeed come true. Where would that leave our markets if that were to happen? This is not directly in your research, but where would that take our markets to then?
So, Rahul, our markets have done very well over the past 25 years. People don't realize that we're amongst the best performing stock markets in US dollar terms, and I think we'll continue to retain that status over the next 10 years. So as we have made that forecast in our report, we think market capitalization of Indian equities goes from $3.5 trillion to around $10 trillion. And that translates into about 10% dollar compounding of equity returns. That's a very strong number. If we achieve that, India will be the best performing stock market in the world in the coming decade.
Well, Ridham and Morgan Stanley clearly very long and bullish in India. Thank you very much for joining us, and I wish you all the best.